Just Ashish, good morning. Thank you for joining us. Okay, Ashish, auto stocks also have corrected this year by about, the auto index this year is down by about 7 to 8%. Do you think that's broadly in line with markets, or the macro for autos is also changing because if interest rates will go higher, it will have an impact on underlying demand?
So no, I don't think the macro for autos is changing at all. In fact, macro actually is improving for autos because many companies selectively are benefiting, significantly over the next 2 years because of a lot of triggers that are playing out, the emission norms, the safety norms. So the macro hasn't changed too much. It's just a case of, you've had so much volatility in the markets. You've seen people, sell their winners to sort of, buy their losers, which are down, half or more than that in this market. So it's not been a case of any change in macro. The auto sector has done very well, which is why people have been tempted to book some profit. But fundamentally, everything's in tight.
Okay. Ashish, so let's talk about the division of the auto space into two. First, the entire rural focus auto business versus urban focus auto business. The rural focus would include two-wheelers and tractors. The urban focus would include passenger car and to a large extent SUV companies and a company like Eicher. Where do you think there is more demand visibility for next 3 to 4 quarters?
So it's not the best way to see it from a rural versus urban point of view. What I would say is from a division of segments point of view, we are right now in a mid-cycle where, be it commercial vehicles or four-wheelers or two-wheelers or even tractors for that matter, are likely to grow anywhere between 8, 10, 12%, depending on the segment. Typically in an early cycle is when commercial vehicles outperform. That phase is behind us. So the growth for commercial vehicles is likely to be around 10% or so in FY19. That's our view. FY20, there's visibility of very strong growth because there will be a pre-buy before the emission norm changes. I think there's a very significant event happening in the auto space where India has typically lagged global emission norms by 10 years, and you're bridging that 10-year gap in the next 2 years. So there's significant opportunities that are coming up in the auto space, and a lot of disruptions happening for various segments as well. For example, diesel cars are going to get very expensive by the end of FY20. Commercial vehicles also see a 10% sort of price hike. So there will be a very strong pre-buy before the price hike. So FY20, at least towards the end of it, will be very strong. And FY21 could probably be a slump for the commercial vehicle space. Unless you have all these talks of cash for clunkers right now, that's something that can prolong the CV cycle by another 2-3 years. But at least as far as CVs are concerned, our outlook is at least 10 to 15% growth for the next 2 years. For two-wheelers, is likely to be anywhere between 8 and maybe 12% because you are in a mid-cycle, you are seeing rural recover, and there are a fair amount of two-wheelers that are urban focused as well. Scooters, for example, are very urban. So even in that segment is benefiting from a urban pickup and definitely a rural pickup. In passenger vehicles, it's more a case of it follows the model launch cycle of a lot of OEMs. So today, if you have a strong model launch pipeline for a lot of OEMs, that should keep the cycle strong. Only in tractors, tractors have had a strong growth this year, around 17-18%. Even last year was strong, and the coming year also, FY19 should be, anywhere between 12-15%. FY20 to our mind could be a worry for tractors because typically after every election, tractors see a down cycle. Anyways, after 3 years of strong growth, tractors could be weak. So tractors is the one segment which has the least visibility going into FY20.
The most interesting space right now is what is happening in the entire SUV market. It was dominated by only one company, Mahindra. Then comes competition. You had Duster, you had Ford EcoSport, and now Maruti also has come back with some interesting launches. How do you see the dynamics of the SUV market changing, and eventually who will benefit?
So eventually, obviously, it does affect the leader in the space, which is Mahindra. But see, what's happened actually in the whole PV space, all the foreign guys, you name the company, had come in initially with a small car. And they tried their hand at the small car market, and they've realized that the first time buyer, who's typically the the small car buyer, is fixated with Maruti because of the cost of ownership and because of just the peace of mind you get with Maruti. So they've all exited that space, and unfortunately they've all now diverted focus to the SUV market. And in fact, what's also not helped Mahindra's case is that the SUV has caught the fancy of the urban buyer. Earlier the SUV wasn't an urban vehicle, but now you have all these urban SUVs which have come up, and the brand conscious urban buyer is tempted to play around with these foreign brands which with equally competitive products. So the issue is that this competition in SUVs has just begun. It's going to likely be very high for the next few years, and that's the reason why Mahindra is going to find it tough to sort of maintain a market share even from here.
I am saying India.
Ashish, clearly, the new fad word within autos is the electric vehicle space. Now, a couple of these, companies have been making those nascent steps. Mahindra and Mahindra, for instance, at their investor day yesterday, has talked about as to how they're gearing up and pulling up their socks when it comes to EVs, and they plan to make some significant plans going up there. Which of the companies from within autos do you think, or for that matter, even auto ancillaries, do you think can actually capitalize on this big trend change from the regular fossil fuel based automobiles to now electric vehicles?
So there is it's too soon to say, because anyone and everyone is trying their hand at electric vehicles right now. To my mind, there's a lot of distraction around this segment. People are talking about it a lot, but it's not worth playing anything in EVs right now. For the next 7 to 8 years, the capex will be very front loaded, and there will be heavy cash calls for anyone who's doing anything in electric vehicles. To my mind, it's basically taking away the focus from the big event that's happening in the next 2-3 years, which is the safety norms and the emission norms. So that's going to determine the underperformers and outperformers in the sector. In electric vehicles, to my mind, it's best played after 5 years, when you have more visibility on what's the cost of the technology. Battery prices are falling as we speak, and which is why no one's setting up battery plants in a big way yet, because they're importing it while the prices are falling at the moment. So it's still too soon to play electric vehicles. Plus, I think we have to ask ourselves a question of do the Indian customers, do the Indian people on the road really aspire to own an electric vehicle? Probably not. I mean, they aspire to own a Tesla, which is a difference. I mean, the people aspiring to own a Tesla are not friends of the environment. But electric vehicles have been around for a while. You can't force people to buy it unless there are heavy incentives, and if the vehicles are made more exciting. So that, to my mind, is a long time away. You could have it initially in urban public transport. So let's say city buses which have a defined route, those could move electric very quickly. Three-wheelers could move electric very quickly. For the the defined route city buses, you can have charging points strategically placed, so it won't be as difficult. But you will see the movement into scooters and then eventually passenger cars at a much later stage. So we can talk about every company is doing everything in electric vehicles. Everyone's trying their hand at something in electric vehicles, but it's too soon to play that space.
How do you see the auto ancillary space would change? I mean, correct me if my numbers are wrong. The average car has some 600-700 components, and the new electric engine will only have 20-25 components. So there is disruption which could happen at the auto ancillary level, and not every auto company would be doing what they're doing 3 years from now. So do you think auto ancillary space is in space for a big reboot?
Yes. So, I mean, see, not every auto ancillary will be disrupted. You will still need tires, you still need suspension, you still need a host of parts that you need right now. Anything that's related to powertrain, engine, transmission could see an impact. So we're in a very funny spot. In fact, the mood of the conference also is such that you don't know how to really play the sector, because on one hand, anyone who has anything to do with engine technology or engine components has a phenomenal 3 years ahead of it because of the big shift from BS4 to BS6. But having said that, those same components could be irrelevant going into electric vehicles. So, what typically happens is that people would want to play the next 3 years or 4 years of strong growth, and then after that the PE can decay. So I agree with you, there could be a worry for anyone who has engine components, these overall powertrain components. Their future going to electric vehicles is uncertain, but the rest of the auto ancillary pack is not seeing that problem. I mean, you'll still require a host of parts that are there. I mean, today there's this whole, Tesla has spoken about a lot, that you have, such less parts in an electric vehicle. But if you're only talking about the engine and powertrain components, the rest of the equipment or the rest of the components are actually exactly the same.
Would you align with, and again I'm taking a liberty of being stock specific here, would you align with a company, let's say with Bajaj Auto or any other company which is in the export market? You know, up until now, companies which domestic domination like Maruti, they've done well. But now if the global economy picks up, you never know, exporters could also make a comeback.
Yeah, so I can't really take company specific names for internal compliance, but what I can tell you is yes, anything that has any company that has something to do with exports, especially in oil and commodity driven economies, are seeing a big recovery, including Bajaj. So that's something that could benefit now. Whether it'll outperform domestic market, that still remains to be seen, because the domestic market growth is also strong. So if you have exports picking up to, let's say, from a depressed base, it picks up to, let's say, 15-18%, but you have the domestic market also growing by 12 to 15%. And what's more important to note, Nikunj, is that you have a big change that's happening in the content per vehicle in India. So today you're looking at just volume growth, but if you look at the premiumization that's happening, if you look at the safety norms and the emission norms, the revenue growth for some OEMs and especially the auto ancillaries is double of their volume growth. So that's the real story here. The reason why we prefer auto ancs as a way to play the sector is that they are significantly outperforming the industry because of the safety norms, emission norms, premiumization, and anyways these are better businesses because they are market share agnostic. There's a vendor consolidation that's happening. There's a huge replacement potential. So I would say that the auto anc space is a better way to play the sector.
And just to get closing comments from you, again, I'm not going to get into stocks specific here. I respect your compliance there, but what I'm trying to understand from you is that in last 2 years, the auto sector has been dominated by Eicher and Maruti. Maruti for their market share and Eicher for the promise of urban youth and the penetration levels which were there. Do you think what has worked in the past will work in the future as a trend, or now the trend also within autos could change?
No, this trend will continue. In fact, you're still you're at the tip of the iceberg as far as urban discretionary is concerned. There has been some noise around Eicher because you're reaching a stage where demand is almost close to supply. There was eventuality that had to happen, but the outlook for growth from a consumption point of view, from a urban discretionary point of view, remains very strong. This is just the beginning. The J curve is yet to hit us, something we've been waiting for very long in urban discretionary, something we've been waiting for. That has still not come. So even though you've had strong growth over the last 2-3 years, it's just the beginning.
Okay. All right, Ashish, it was fantastic to have you on ET Now. Thank you for your wonderful insights